Back to another weekly market breakdown for the indexes or the indices, okay, whatever you want to call it. So today we are going to take a look at the NASDAQ 100, the US30, as well as the SNP500, the German 30 index, as well as the US oil and gold. Now, before we get started, if you are new to the channel, a sub would be appreciated as I provide valuable educational content on a daily basis. And if you enjoy the video, please smash the like button for the YouTube algorithm. And as always, just let me know down in the comments below exactly what it is that you would like me to cover in my next video. Now, before we get started with this, there is no question to whether or not the stock market is going to fall. It's going to fall whether you like it or not. The NASDAQ is going to fall. The Dow Jones is going to fall. The US30, which is the Dow Jones, the SNP500 is going to fall. There's no question about that. Whether you like it or not, whether someone said you need to buy low, well, guess what? We are not as low where you could actually buy. The price is going to continue to fall. Okay, I said this in January and I will say it again. Now, before we get started, there's just something I want to speak about that was published not too long ago from the Amazon CEO. He says that costs from the pandemic, inflation and war are too high for companies or for his company to absorb. Now, if you read a little deeper into that, it simply means that they are quite being under attack, and Amazon being one of the larger cap companies on the listed on the NASDAQ 100, that's a bit being fearful for investors, giving us a further indication about that as well. Now, next thing we can look at is interest rates. So with the CPI sitting at a sky high, the dollar index rising for no reason, we have a high possibility that the Federal Reserve at their next meeting is going to hike interest rates by a half a basis point. Last month it was done at a quarter basis point. We can definitely expect the market to react to that negatively. Now, the question is, how does high interest rate affects the stock market? Well, it's a bit tricky, but I'll try to explain it. Okay, so low rates are good for businesses. Okay, payments on existing debts are lower and it's cheaper to take out more debt with which to finance expansion, so growth for the overall growth of the company. Well, but there are exceptions, of course. Low interest rates are not good for banks, which aren't able to charge as much for mortgages or home loans, or whatever you call it, and so on. But if interest rates are slashed because central bank is scared of an economic slowdown, investors might get jittery about companies' prospect in the aftermath of the last recession. Stock markets continue to fall even after rates bottom out. Now, the question that you're asking, okay, is can you put that in simpler terms? That's quite simple, my friend. The NASDAQ consists of 100 tech stock companies. Yeah, these companies generate profit from consumer spending. So Apple makes money when you buy an iPhone or an Apple, and these companies, they make money when consumers are spending, but consumers are spending when interest rates are low, because that return that they need to pay is not as high as a result of having high interest rates. But what happens if you've got high interest rates? You got higher inflation, you got slow wage growth. Okay, so this is people getting paid well under the belt. You got inflation sitting at sky, you got interest rates going sky, and you got all of these things sitting at a sky level. The consumer over here is not capable of keeping up with all of this, so they stop spending because they need to. What do they need to do? They need to pay back this debt over here with higher interest rates, which doesn't allow them to spend money on goods and services that is related to tech stock companies that is listed on the NASDAQ, like Amazon, Apple, Tesla, whatever the case is. And as a result of that, stocks tend to fall, unless because why high interest rates are there to encourage consumers to spend less. Now, when the interest rates goes down, consumers go, okay, it's time to spend again. That's why what the Feds are doing is they're trying to hike interest rates so that they can bring inflation down. By hiking the interest rates, what that does is it encourages consumers to spend less because they need to now work nicely with their money to ensure that they pay certain things, that had high interest rates involved. Now that makes sense. So yeah, but I'm still going to go through this breakdown. But at the end of the day, the price is going to fall whether you like it or not. So we're going to start with the NAS100. Starting on the monthly time frame, what do we see? Firstly, we can see how the market printed the strong level of support. Support got broken, became resistance. The resistance market tested at level multiple times. The market also printed this candle with this long wick that you expect the next candle to go and fill in the wick. So we can definitely expect the NAS100 to continue lower and to go and test the previous level of support as identified from a monthly perspective. Now on the weekly time frame, what do we see? From a weekly perspective, we can obviously see how the market tested, rejected this level over here. That clear support, tested it twice as resistance, and the market started that melt to the downside, giving us an indication we can definitely expect for the market to continue lower. And there is really no question about that, ladies and gentlemen. Now from a daily perspective, now I spoke about this market on Thursday when the market was sitting at this level, explaining all of the reasons why we can see the market continue lower. Now if you got in on this trade, well done. If not, well then I guess you need to set your alarm and prepare yourself to get back to work again. Now, the best way to approach the situation if you are not in this market yet, right, is to wait for the market to break below this level. Then on the retest, start looking for that selling opportunities for the market to complete this impulse correction and impulse pattern, and also for the market to go and test that previous monthly support as identified from a monthly perspective. Next up, we do have the Dow Jones on the monthly time frame. What do we have over here? We can firstly see this level over here acted as a strong level of support, got broken, it became resistance. The market is currently testing and it's about to break through that level from a monthly perspective. Now if you look here on the daily, on the weekly time frame, what do we see? Now from a weekly perspective, we can firstly see how the market is stuck within this weekly range. Now the market had printed a strong level of support, it got broken, it became resistance, market printed resistance, and all of that resistance, it was acting as support over here, it got broken, it became resistance, the market tested it twice, and then the market finally broke below that level of support that became resistance, broke above resistance, now testing it as support. So the market is literally just stuck in between these two levels over here. Now, like I said before, there's no question to whether or not the market is going to fall. The market is going to fall whether you like it or not. Again, so the best way to approach the situation is quite simple. As traders, we have to be reactive and not predictive, and learn to adapt to the ever-changing market environment. So all of this support that the market had created over here, we're going to wait for a clear break below this level. All of that support would then be turned resistance, and we're going to start looking for a selling opportunity for the market to complete this impulse correction and impulse pattern as well, and go test that previous monthly support in the market. Also, next up we do have the SNP500. Starting on the monthly time frame, what do we see? From a monthly perspective, we can see how the market had printed this information. Now after an information, you expect a pullback to the neckline, which is exactly what we got. We can see how the market started that continuation to the downside as well. If you drop down on the weekly time frame, what do we see? From a weekly perspective, we can see how the market had also created this structure over here that has support, broke below that, tested it as resistance multiple times. The market had now started to mount to the downside there as well, and we can definitely expect that continuation to take place for the market to go and test. Also, same type of price, I'll probably go with that one there, same type of price action. Next thing, we're on the daily time frame. What do we see? Now we can see this market is also stuck within a consolidation phase. The market printed the strong level of support, got broken, became resistance. The market also printed the resistance, got broken, and is now testing it as support. Now I also did a breakdown on this not too long ago, and I hope most of you got into this sell because I said the market would start that meltdown to the downside there as well. Now, again, the best way to approach the situation is because we expect this market to continue lower. We're definitely going to wait for the market to break below that level and then ride that continuation to the downside. Now, it's important that we are reactive and not predictive, and we have to learn to adapt to the ever-changing market environment. There is a high possibility that the market could also just consolidate within this area, and then finally we might see that breakout. So that's why it's important that we wait for a clear break below this level, and then on the retest we start looking for the continuation to the downside. Next up, we do have the GER30, or the German index, or the DAX. So starting on the monthly time frame, what do we see? Now, firstly, if you look left over here, you can see the market printed the strong level of support, strong level of resistance, came back to test it as resistance. The market also printed the strong level of support and then came back to test it as resistance there as well. Now if we drop down on the weekly time frame, what do we see? Now from a weekly perspective, it's quite clear the market closed below this most recent structure that it had created over here that acted as support, broke below that, became a resistance. There's a high possibility that we could potentially see the market complete this information, indicating to us that we can definitely expect the market to create an equal low. Now if we drop down on the daily time frame, what do we see? Now from a daily perspective, I made this breakdown when the market was sitting at this level, explaining all of the reasons why we could see that melt into the downside, and that is exactly what the market had given us. Now the next opportunity in the market is sitting exactly where it is now, because this level over here acted as a strong level of support. It got broken, it's now turned resistance. So there's a good indication that we can definitely expect this market to start the meltdown to the downside and go and test that previous level of daily support there as well. But like I said, as traders, we always have to be reactive and not predictive. The market will also spike up slightly higher and then start that meltdown to the downside, but the buyers will remain bearish for as long as the euro is not doing too good at the moment there also. Now next up we are going to look at the US oil. Now if you look at the US oil, which I've done a weekly breakdown for as well, but I'll just go over this very quickly. So on the monthly time frame, what do we have? Firstly, we can see if you look left, the market printed strong resistance, rejected that level quite aggressively. There's a high opportunity that the market could go and fill in that entire week. Why? Because it's a continuous tension between Russia and Ukraine had still not stopped as well. From a weekly perspective, what do we see? Here on the weekly time frame, we can see how the market printed this information. And after the information, you expect a pullback to the neckline, which is exactly what the market had given us, giving us an indication we can definitely expect a continuation to the downside from the US oil first. Now if we drop down on the daily time frame, what do we see? Now from a daily perspective, the price action is quite all over the place. Why? Because from a weekly perspective, we saw that information. Now on the daily, we can see how the market had now printed this W formation. After W formation, you expect to pull back to the neckline before the continuation to the upside. So we can definitely expect the market to pull back slightly lower before continuing higher there as well, because the information is considered a bearish pattern from a it's considered a bearish pattern. So we can definitely expect the US oil to pull back going into next week, for the market to complete the information from a weekly perspective, and for the market to complete the W formation from a daily perspective there as well. And then from there, we can definitely start looking for the long opportunities in the market there as well. Next up, we are going to take a look at gold, starting on monthly time frame. Same type of price action. Market can equal high when they rejected it quite aggressively, and we can definitely expect this market to continue higher after completing this overextended information. W formation, market pull back, hit that level and start continuing higher there as well. From a weekly perspective, what do we see? Now on the weekly time frame, there is a high possibility that we can expect this market to complete this information, pull back, and then continue higher there as well. So we can expect gold to continue slightly higher in strength before continuing lower as well. Now if you look left over here, you can see this is the kind of structure that we can expect the market to go and test before pulling back and then continuing higher. Now the best way to approach the situation is wait for the market to go and hit that level, then on the retest you can start looking for buying opportunities. In doing so, will the market then also break the strong level of resistance that would then be turned support, and then on the retest you can then start looking for that buying opportunities for the market to go and fill in the wick from a monthly perspective. Now that's all from my side. Thank you for your time, and as always, cheers for years.